Okay, folks, welcome to Thursday Night Stock Charts Live. Tonight, we're going to talk about a trade that we're involved with, and we didn't do well with it, is Netflix. We're going to talk about where the shares are, why they went down, where do I think the bottom is ultimately, but why in the short term anyway, after the next couple of days, I'm pretty bullish on Netflix as a counter trend rally, not as an investment by any stretch of the imagination. So I'll put that out there right now. So we're definitely going to do some analysis of Netflix chart and our strategy for managing our trade. How did we trade it? And we're going to go over the weekly charts. Every Thursday, we go over the weekly charts and we see, is this market going lower? Are we near a bottom? Are we still overvalued? So at the end, if I have time, I'll do some chart requests. So let's go to comments and say hello to people. Hey, Franklin, good evening to you, pal. Rough day. Sorry, my voice keeps cutting in and out. Talon, right about Peloton. Could China's slowdown be affecting parts of it? Yeah, no doubt. I don't know much about Peloton. I know it's the classic stay-at-home stock. It's not looking good. It's not looking good. Jeff, hey, brother. Pre-drag. How you doing, bud? Luis, back again. Nugget went down really hard and is 51.36. Spot gold is at 18.39. Is this usual? LABU also got hit really hard. Seems to be no bottom. Well, the dollar rallied today. So we're going to go over gold in a moment. I think that Nugget probably got a little bit ahead of itself on a short covering rally, even with the U.S. dollar up. So we could talk about that. We're in a good position right now where we really don't care what Nugget does because we sold the 51 covered calls. And, if they close down below 51, okay, we had a good week still. If they get called away, okay, so be it. We'll sell puts next week against the position. So we'll talk about the charts when I go over gold in a moment. I got so many wires here. Let's see what else we got. Oh, LABU. LABU, we can go over that chart. As a matter of fact, we're going to go over that chart. What we did for people that are not aware, I sold, it was a small position on LABU naked puts. I forget what we got paid, like 60 cents a contract. So if assigned to us tomorrow, they'll be put to us at a basis cost of $19.40. So I think they closed down below that mark today by a couple of dimes. Let's satisfy curiosity here. Yeah, closed down at $18.90. But we knew it was going here. I've been saying for a while now, a couple of weeks now, that we were going to flirt with the high teens on LABU and to get ready for it. So no big deal. I'm willing to take the shares. They're beaten down. So let's talk a little bit about Netflix. So what we did on this trade, it was an earnings trade, and I'll show you. It looked as though we were pretty far away from the strike price. We sold premium. We sold a Strangle. So in this case here, it's where the casino didn't win this hand yet. And I'll talk to you about that in a bit more in a moment, about how we plan on turning a negative into a positive using technical analysis. So you could see that we have kind of stopped going down here. I'm not convinced that there's not more room to the downside. We are oversold somewhat on RSI. This is only a 15-minute chart. If you take a look at it on the daily chart hasn't updated yet. That'll update tomorrow morning. If you take a look at it on a 4-hour chart, this is current. We're trading significantly below the third standard deviation Bollinger Band with an RSI of 13.6. So it's oversold on an intraday basis, but I think any rally tomorrow is probably going to get sold into. So I'll talk to you a bit. We'll go over what happened to them on earnings. And their earnings were, well, it wasn't necessarily their earnings. Their forward-looking guidance was bad, really, really bad. Subscriber growth, about half of what was expected. Their reduced forward-looking guidance. So it's not good. It's not good for the next quarter or so at a minimum. So that being said, that's the negative news. We could easily see the high 300s on Netflix on a continuation move lower. Let's go to the closing price action on the day. This is not going to take into account the after hours price action. But you could see that this is where we put our strike. Actually below that at 455. So we sold a put at 455. The shares go below that mark. Well, we're the banker. We got to deliver on those shares, or those shares will be delivered to us, I should say. So what we'll do here, and we also sold a 600 call. That'll expire worthless. So what we'll do here tomorrow morning is I'm gonna put an advanced order in well before the market opens to roll down the call, basically book our profits on the call, roll it down to, at a bare minimum, the 455 strike, and that'll create a straddle at that strike price. So that'll generate a little bit more cash flow. With the put options, I'm willing to bet that they're going to close down in the money. So what we'll do tomorrow is buy to close that position and then roll it forward into next week. And I mentioned that we planned on using technical analysis to turn this trade into a not so bad trade, at a minimum, a smaller loss. So if not break even with a slight profit, and I'll show you how in a moment. So by rolling out of the 455s and into 455s next week, we get paid a credit. What that's going to be, I don't know. But that additional credit brings down our basis cost. So we were paid $3.10 per contract. Our basis cost right now is $451.90. Is that right? I think it's $451.90. Maybe something like that. We'll roll it out into next week. We'll probably generate another few dollars on Netflix, and that'll further reduce our basis cost. But it will be there a year and a day rolling out this trade. And I'm not confident that we're not going to see significantly lower lows on Netflix. So what's the game here? What's the game plan? Well, when you use the daily chart, you could clearly see, and this is why I was a little bit more aggressive with my sizing and my strike today than what I would normally be, is because we were already in a situation where Netflix had sold off from a high of $700. We're down significantly. Where were we? We are down about 28% from the highs. And I knew it was going to go lower. I had that feeling. The price action's telling me that. Stokes are telling me that. RSI is clearly telling me that. But that being said, RSI, we went out today at 2245 on RSI. So you want to use technical analysis for dummies, that's quote unquote oversold. I don't use that logic. I use a logic of with a stock like Netflix and S&P 500 stock, 17 to 15 is oversold. We'll probably open up tomorrow. I mean, what we saw after hours was a crash. We're going to probably open up tomorrow morning with RSI at about that range, 15 to 17, maybe even lower for all I know. So what we need to appreciate is where are our support levels? Well, where we're trading after hours can't even be seen on this daily chart. We got to pull back to a monthly chart. And I think that ultimately we're going to find a bottom at around 392 a share on Netflix. So how do we trade this moving forward until we get down to that share price? I think it was Jeff that asked the question the other day. How do you manage a worst case scenario? Well, this is pretty much one of them. You know, we've been here before. This is not new territory for us. You want to keep it rare. It's certainly not where you want to be. It ties up a lot of capital, ties up a lot of time, and if you lose other opportunities to be trading. So what we'll probably do in the very short term, we'll roll that 455 strike and we'll invert on the call side, and we'll probably sell pretty aggressively some covered calls, not covered calls. Well, technically they are covered because you have the put. So we'll be selling calls against the position, generating cash flow. When we sell the calls, we'll be increasing more our cash flow coming in, therefore reducing our basis cost. So that still doesn't get you back to even for a while. And for all you know, you get a short rally and you roll over, you break down to new lower lows. What do you do? Well, what you need to do, or what we will be doing, is using technical analysis, because one of my favorite trades is the extreme oversold trade. And tomorrow we're going to open up at extreme oversold levels. And there are a lot of shorts that have made a ton of money. What do they need to do to make those profits real? They got to buy the stock, and that's going to send the shares up higher. So here's your downtrend line. Now, you could argue that on any counter trend rally, we can rally up to this upper band of resistance, just as we did back here. We didn't make it here. We made it here, and that was the top, so you can't count that. But obviously, this is a declining resistance level. You also have your 50-day rapidly approaching the 200-day moving average. That's going to act as overhead supply a bit on the share price, because technicians aren't going to want to buy it until that negative crossover takes effect. That's why we have to be very, very aggressive with selling premiums, selling calls to hedge the position, maybe buying some puts, selling calls, buying puts to hedge the position so that we don't make a bad case even worse. Now we're in defense mode. We're doing a little bit of the rope-a-dope. But where we become more aggressive is where we begin to hit support levels, 400 to 490, 400 to 390, in that range. I'm going to be buying a lot of Netflix stock in anticipation of a counter trend move, as RSI is significantly oversold, and we will sell into that rally. Do we get made whole? I don't know. But we can't tie up that much capital. If we need to take a loss in the trade, we take a loss in the trade. But there are many ways to skin a cat in a situation like this. So I'm confident that we'll come out fine on the other side. So that is Netflix. Now it's consolidating in the after hours. Now it's down to 405. You know, I think it's going to have to see a 3 handle before buyers get excited. Okay. So here's the headlines on Netflix. Obviously, if you're long, you're probably not going to want to read this, but I'll share it with you anyway. Talent. Hey, Bob, good evening. Good evening to you. I've been short SPY all day long. Congratulations. Can you tell me what the next support level is on SPY? Sure. We'll use our friends over at TrendSpider. Use this as a shameless plug. And get 35% discount code. Use the link below to go over to TrendSpider. Doom. Oh, and here's another reason why. Using TrendSpider, I think that we're going lower. Here's monthly support at around the 400 mark. We'll probably overshoot to the downside and then rally back off of that level. So that's another reason why I think that we are going to head lower on Netflix and why I'm not buying after hours. I think that you're going to see a washout here, but this is going to be at least a short-term swing trade to the upside, but then you got to get out because I don't like this market at all. Okay, SPY. You're looking at the next critical support levels at about 425 per share, in that neighborhood, give or take $1. Where do we close? 446. Big break on the week. So we're going to have another couple of unless we rally back strong tomorrow, we are going to have some additional downside here because the weekly chart, monthly chart, not looking good whatsoever. Daily chart, bearish reversal bar. And today's a classic reason, as I always preach this to members, is that, in a market like this, rarely do, let's take this off, rarely do markets find a bottom on a day where you open up with bright green futures. Usually it's a dark and gloomy morning. Futures, bright red, triple digit down digits on the Dow Jones. I mean, ugly price action. And we're not there yet. They still try to trick this small retail investor into buying stocks at the open. What are the big guys doing to the close? They sell. And that's exactly what happened today. So you got to avoid that. And this is why you got to keep that pile of cash on the sidelines for when opportunities arise. Looks like we may see a little bit of a bounce tomorrow at 448, but I don't think it holds. I just don't think it holds. I mean, they had it positive early in the day, most of the day. It looked like a pretty darn good day. And then all of a sudden, they dumped. So is the market cheap after this sell-off? Nope. Market remains strongly overvalued. When did this update, though? To be fair, I go over this every Sunday. I never do it on Thursday. Because it's still at 2.1 standard deviations. I think this needs to update over the weekend. We'll revisit this. This was updated on the 13th. Ignore this. My apologies. Get rid of that. All right. What else do you want to talk about? Oh, so the market's selling off with the Federal Reserve that's real serious. Oh, they're serious this time about fighting inflation, right? Well, obviously, if you want to fight inflation, you're going to reduce your balance sheet. Well, let's take a look at their total assets. Oh, look at this. New all-time highs this week. So when you want to fight inflation, you're jacking up interest rates like a half percentage point on a Sunday, like Fed Chair Volcker did in his heyday. You're not throwing gasoline on the fire. They're still doing it. So don't listen to what they say. Watch what they do. They're still aggressively buying debt. All-time highs. This was released at 3:30. So I guess that's Central Standard Time. So I guess it was after hours it was released. All right. Let's check back in with NFLX. Our wounded soldier. Big rally, big rally. Let's see what the futures are doing on this Fed release. Russell 2000 consolidating. NASDAQ 100 consolidating, not doing much here. See what my NVIDIA is doing. Right at my strike. Son of a gun. Rough day. Okay. So let's go to the weekly charts. All right. Jobless claims released today. Wow. They rose to 286,000. This economy is screwed. Let's begin with bonds. Bond yields are up on the week. Big breakout here. Major breakout. The 20-year bond ETF. It's off the lows. One trading day left to go. Let's go to a daily chart. For you folks out there that are not familiar with the importance of bonds relative to stocks, if you're yawning right now, saying, why is this guy talking about bonds? It's important. It's really, really important. This is why the stock market is selling off right now. It's because of this price action here. This is the proximate cause. And I got to be honest with you. With the stock market selling off as it is right now, I think at some point in time, the Fed is going to have to start doing a little bit of chatter out of concern about basically a big catastrophic sell-off in this market. So I'm not all that worried per se about the extreme oversold stocks because they're in an unsustainable downtrend. They will rally soon, but those stocks that haven't really been killed yet, they're gonna be. I mean, I wanted to trade Microsoft earnings. I don't know if I'm going to do it, or if I do it, I'm going to put on a hedge. Microsoft is now down. It's not giving me the percentages here. Won't give me the percentages. Here, let's go to a daily chart on Microsoft. This is going lower. This is going lower. It's going to probably break 300 tomorrow. And RSI is only at 33.15. So this can go a lot lower. And it is going to go a lot lower. and it's very overbought. Doesn't have the RSI that it once did above 96, but it's still got an 82 RSI on a quarterly time frame. The VIX weekly chart, very, very bullish setup here. Very, very bullish. Daily chart. Hey, Bob, where's the bottom on the video? I think we're close to a short-term bottom on the video. But ultimately, it could be a lot lower. I'll go over NVIDIA in a moment. We have a position in NVIDIA. We're profitable on our Strangle. We've been selling a lot of call options to offset the weakness. So net, we're still up on the trade. Well, it depends upon where we open up tomorrow. If we gap down, that may not be a profitable trade anymore. But I think it's going to rally fairly soon. And I'll go over the chart and I'll go over the whys behind that rationale in a moment. So the VIX looks like it wants to go higher. The Dow transports, this is bearish, man. These need to rally tomorrow. If they do not, this is a market in a lot of trouble. Why? It's because we will have broken down below what was support and was resistance at one time in the past, will now be resistance yet again. This is a bull trap. You break out, and then you break back down, and you close it back in that trading range. What normally happens, you usually retrace back down to the low end of that range, and quite often you break through it. So the Dow transports are in a lot of trouble. The Dow Jones Industrial Average weekly chart. They've now broken weekly support. Volume is not that bad so far this week. Let's go to a daily chart. Bearish reversal bar. This is now resistance here. Whenever you get these reversal days where they lure the little guy into the market early on and then they sell into him, this now becomes resistance because there are a lot of guys that got slaughtered up here. They were buying. They didn't want to move. They didn't want to miss out on the rally. So they had fear of missing out. They bought the rally and then got walloped. Abel, hello, sir. Welcome. What stock? Which stock is the fattened calf, Bob? Can you elaborate on that, please? That sounds like a biblical phrase. I got to look at that again. Which stock is the fattened calf? Elaborate on that. I got to learn more about that. I'm going to be Googling fattened calf in a little while. All right. What else do we have? S&P 500 weekly chart. A big break of support here. But volume, not that bad. What volume like today? It was pretty high. Now you see these Stokes, how oversold they are relative to prior periods. So we're gonna bounce, but I think what we need here, you're gonna wake up and you're gonna see horrible, horrible, horrible futures action. And at some point in time, these Fed heads, they're going to get a call from Biden, and they're going to say, "Hey, we're not going to get reelected. You got to get the stock market back up again." Okay, you got it. Then you'll have them start giving speeches and try to jawbone the market a little bit higher. The Federal Reserve won't mind a stock market down 20% over the course of a year or 2 years. They just don't want it right away. They don't want to crash. Uh, Walls, who is the larger during this sell-off that I can short? Well, Tesla. Tesla looks like Tesla looks like a train wreck. And I was talking to a coaching student of mine, and he wanted to short. He is short Tesla, and Tesla. I told him the last time we spoke. I said, if you see Tesla trade back down below $1,000, which it did yesterday, it's probably not going to close back above that mark for a while. What did it do today? Big rally. Then it faded. Where did it close? Just below $1,000 a share. So I think Tesla is a good short. I mean, if you take a look at it from a weekly time frame, here's your lower high, a breakdown below 886.12. It's all over for Tesla. It's going a lot lower. IWM weekly chart broke support. I mean, this is a short. This is clearly a short. I mean, this is a multi-month. It's a matter of fact, it's over a year of how many bars is this? Exactly 1 year's worth of consolidation gone. Broken. What did it do today? Horrible. We had the negative crossover of the 50-day down below the 200-day moving average on the Russell. The Trip Qs weekly chart. Down nearly 5% on the week. Support 356 to 450. Daily chart. Brutal. Broke through the declining lower band of support on big volume. How did it finish off? Let's go to a 15-minute chart. It went out pretty oversold. RSI down below 18. This is a type of environment you really want to hope tomorrow that that you wake up bright green futures. Oh, excuse me, bright red futures. You want to see them down ugly, and then you want to see a reversal to close up on the day. That'll get the shorts a scrambling, and that's what you want to see. We're nowhere near that yet. We're close. I shouldn't say we're nowhere near it. We're close. We're close. You want to see this type of a sell-off, a big sell-off in the morning occur when you go out the prior day at very oversold levels. The banks, even the banks aren't enjoying rising yields, and they are rolling over, down nearly 4.5%. Daily chart. They're gonna move lower. Support right here on the XLF at about 38.50 per share. Technology, a train wreck. Technology is a train wreck. Broken support. Stokes declining. Very weak. Daily chart. We're going to 155 on the XLK. The semis, disaster area. Down 10% on the week. This was the bright shining star of last week. We closed up. This week, we undercut the lows of last week, and the semis are going lower now. LABU, which we're now probably going to be long of. Love the oversold condition on Stokes. RSI at 28.82. But remember, this is a weekly chart, and this is an ETF. So it's got a lot of stocks in it. And when you take a look at it on a daily chart, the Stokes are really oversold. And you have your W formation already formed. So I think we're going to rally in the next week or so on LABU. RSI with a 26 handle. But this reversal bar on the day tells me, hey, it's going lower. Big volume. Let's see how we close out the day. Do we have a hope of a rally? Let's go to the 15-minute chart. RSI 23. You kind of hope they sell it off hard tomorrow, and then you get buyers that move in. Why is the Dow coming up? Let's talk a little bit about NVIDIA before I forget about it. So it's down in the after hours sessions, testing our put side strike. Okay. So first on the weekly chart on NVIDIA. Here's support at 235, exactly where our strike is. So we really don't want to see it close down below that mark. Stokes are weak. Now to the daily chart. The daily chart, here's our strike, 235. We're going to be there tomorrow morning. Now, your stochastics are very oversold. I mean, even down below this low back in October. So I think that we're going to be due for a bounce fairly soon. But I just don't think that that rally is going to hold. I think it's going to roll over. 2-hour chart. Now, the 2-hour chart, very oversold on Stokes. What's concerning is that you take a look at this 2-hour chart. We're forming a nice consolidation here for the past day or so. And then we broke. We smashed hard, really, really hard. And that just caused the algos to dump. Energy. Weekly chart. This is probably going to roll over here along with the rest of the market. Daily chart. We paused here. I mentioned with members on Market Wrap this night on the 18th. We're probably going to get a pullback. We got the pullback today. Continuation move lower. I would say avoid energy, and it's probably one of my favorite sectors right now. Oil, natural gas, not looking good at all. We had a rally. I predicted this rally, but this week, no bueno, man. And this is a commodity that should be rallying, and it's not. Yeah, it looks like it's going to go lower. Big volume. What else we got? Oil. Even oil on a weekly time frame showing a little bit of topping action. Light volume. One trading day left to go. Daily chart. Bearish reversal bar. Oil's going lower. At least in the short term anyway, oil's going lower. Now, emerging markets, a mixed bag here. The dollar is still strong. Did I go over the dollar? I don't think I did. Oh, I did go over it. I went over the UUP. Actually, no. I went over the Dixie. Let's go to a daily chart. The dollar is still looking strong here. So that strength is going to cause weakness on emerging markets. Daily chart. Yeah, you got to avoid. You got to avoid. Reversal bar today closed up or flat, or closed up on the day, but this is clearly topping action. Just be careful. Gold monthly chart. We have is this updated for the 20th? Yeah. Bullish reversal bar, new higher highs. We hit new higher highs, I believe it was yesterday, and you just saw the gold stocks rip up higher. Let's go to a weekly chart. Look at this. This thing wants to blow through the ceiling. Beautiful setup. Beautiful setup. One trading day left to go. Daily chart. Down day, but not horrible. So gold looking very bullish. All right. As for Nugget, what's it doing in the after hours? I get a feeling that the futures are very weak right now. Nugget still holding above 51, which is good to see. Let's check in with the futures. Russell is up. NVIDIA flirting with support, man. Hit my strike right here. NASDAQ 100 coming off of its lows. Oy vey. All right. Let's do some chart requests. What time is it? 6:45. We have some time. Let's do some chart requests. And I want to sign off because I need to do some strategizing for tomorrow. Jeff D, GGB. GGB. All right. I remember this one. Yeah, we were looking for a breakout point retest. Wouldn't give it to us. It just continued up higher. Good looking chart. Daily chart. You got a reversal bar here off of resistance. Right, the power of the automated trend line. Click of a button. Bam. So I wouldn't be a buyer here because the market's telling you that you have sellers immediately above. If you're an investor, it still looks good longer term. I don't dislike it. I think it's behaving well relative to the rest of the market. So I'm neutral on it right now. Neutral. I wouldn't go buying more. Uh, there's your friend Bayoish. Tesla monthly chart. Yeah, Tesla is in trouble. No doubt about it. It is a monthly chart. We're right at support. Right at support. All right. What else do we have? For Franklin, we'll revisit Joe. Joe on a weekly time frame, still up on the week, but the problem is that you got resistance right here, 67.23. What's the high of the week? High of the week is 66.70. So a bit concerning. You do have resistance there. And I want to take a quick peek at commodities in general. Weekly chart. This is the XLB. This is the materials ETF. Yeah, and as I felt, it was pulling back a bit. What else do we have? Let's go to a few individual commodity trades. Sugar. This is looking wonderful. I mean, sugar is looking outstanding. Take a look at this. Now, granted, this is a monthly chart. What are you doing, guy? But this is really, really pretty. Nice reversal bar, nice support. This symbol here is SGGFF if you want to refer back to it. Some other commodity plays. Mining. Look at mining. The exact inverse of technology. Let's go to a weekly chart. Looking okay. Nice W formation forming, a breakout above 154. And it's going to be game on for the miners. So, oh. I was wondering what you were talking about, Jeff. Okay. Now I see. Now I'm seeing. I'm thinking, for whatever reason, when I saw your message, I'm thinking Scott Baio. Something to that effect. Yeah. Sister 19 lulls online. Well, at least they're not illegal. All right. I'm going to block you, pal. Adios, amigo. Okay. That fella's gone. All right. What else do we have here? Let's see what the inverse of China is doing. Yang. Looks like China's getting ready to run. This is a bear ETF of China, Yang. So if it's going down, it looks like the Chinese stock market. Well, they've been cutting rates. Yeah, this thing's gotten killed. All right. William, welcome. Better late than never, my friend. Catch the replay. If you got any symbols you want me to go over, let me know. I'm going to shut off early. Not early, at 7 o'clock on the dot today. I have a lot of work to do. Let's go back and take a look at some other stocks that we have interest in. Oh, Block or Square. This is coming in. Weekly chart, Square, W formation forming. Yeah, ugly price action, but we're right near support. They tried to rally it, failed. Here again, the value of your trend lines, automated trend lines. Did I mention 35% discount code below? Use that link. All right. Seriously, it's consolidating. It's kind of stopped going down. So this is an interesting play, but if it breaks to new lower lows, I would be out of it. Merck. Why is this? Okay, Merck. Weekly chart, nice rally, but it rallied right up into resistance and it reversed. Daily chart. I couldn't buy it here because you're at resistance. I would need to wait for either the breakout or a retracement, and this is your ideal situation. Back down here, and then back up the truck, assuming that it holds support. So I would wait for the retracement. Too much resistance above, I would avoid. SQQQ, we still have some. It's looking really, really good. It's looking really good. Big breakout. Big breakout on the week. This is one where, if I built up a position on SQQQ, I'd be selling calls very, very aggressively because at some point in time, you take a look at these stocks. At some point in time, the memo from the White House is going to come down to the Fed, and it's going to say, hey, psst, I got midterms coming up, pal. You got to stop this selling. You got to stop this bloodbath. So when that will be, not quite sure. But at some point in time, they're going to have to start managing this sell-off. Not that it's going to stop it, but it's going to manage it, cause some backing, filling, and it'll stair step down. but more mildly. Unless, of course, they've completely lost control, which is quite possible. You're welcome, Will. Goog under 2,600, very appealing. Yeah, but I think it's going to break. I think it's going lower. Stokes are very weak. I think this is probably going to break. Yeah, look at what happened today. Again, power of the automated trend lines. Right? Take them off, put them on. We broke support today. We're probably coming down here to 25.95 pretty quickly. You're welcome, Franklin. Anytime, pal. Anytime. Tom Lou, I'm about to get out of UVXY as I see the market due for a monster rebound. I don't think you're wrong. I think that the day that you see the perfect case for you, or what I would do, I can't give financial advice, but what I would do, were I long of the UVXY on that day, which is going to come, could be tomorrow, could be Monday. When you wake up, bright red futures, and they sell the market off hard, there's your liquidity. There's where you get out and then watch for that counter trend rally. And I do agree, we're gonna rally fairly soon. So could be next week, could be tomorrow for all I know. But I think that we need one last flush out, and then they'll take it up higher. Not to new all-time highs anytime soon, but a counter trend rally, as you mentioned. All right, folks. With that, I'm going to say everyone have a great night. Thanks for joining in. Please smash the like button, hammer it. It helps me out a lot with the YouTube algorithm. Leave a comment. I'll definitely get back to you. Members, you're better off leaving your comments in the Slack forum. And if you're not currently a member, sign up for the 14-day free trial offer. Watch how we manage the Netflix trade. It's going to be it's going to be a challenge in a market like this, but we do it. That's what we do. All right. So everybody have a great night, and I'll talk to you very soon. Be well.